The debt ceiling continues to put pressure on financial markets. Whether you're a stock trader, forex trader, commodity trader, futures trader, doesn't matter. The markets are paying attention closely to this. And in this video, I'm going to keep you guys up to date with that, as well as talk about some trade ideas, as well as trades that I'm actually in myself this week. Let's jump into it. U.S. stocks trade around flatline as President Biden and House Speaker McCarthy are set to resume debt ceiling talks today. So on Friday, you guys might remember there was some walking out of the negotiations, which caused the markets to be a little bit creeped out. On the dollar side, we saw some decline, and we also saw it on the stock market. We saw indices fall pretty quickly off of that as well. So we'll see where that goes. We'll have more news and coverage on that as it unfolds. Meanwhile, European shares were trading mixed, while Greek equities surged almost 7% after the ruling New Democracy Party won the parliamentary elections. So let's jump into the markets and see where things are at. So first of all, I wanted to look at the NASDAQ, and you can see this thing is just an absolute machine right now. It is just trading almost back to the previous highs around 13,900. And this little decline that you can see right here was caused off of the walkouts that occurred during the negotiations regarding the debt situation. The debt ceiling negotiations turned sour. People walked out, the GOP walked out, and we saw a decline. Now, again, the NASDAQ is so strong right now, in such heavy momentum. There's a lot of talk about AI being incorporated into companies and causing a boost in efficiency.
Open the pod bay doors, Hal.
I'm sorry, Dave. I'm afraid I can't do that.
That's been a big story. And we're also seeing now the S&P 500 creating some upward momentum off this as well. Question is this a buy? And in my personal opinion, I like the NASDAQ long if we can get deeper retracements. For those of you guys watching the indexes, I'm looking for 13,600, 13,500, somewhere in this area here for a possible buy opportunity, looking for continuation. So we'll see if I'm right about that. As always, this is not financial advice. I am sharing my personal opinions. Let's talk about the dollar about this as well. Again, walkout caused a little bit of decline on the dollar, and now it is re-pumping to the upside. Now, here's the scenario with the dollar, in my personal take regarding the debt crisis concerns. Now, again, this is not the first time we've seen this. This has happened 78 times in US history, and each time they've raised the debt ceiling after dramatizing and dragging it out for a little bit. So in my personal opinion, that's likely what is going to happen again. We're going to see the dollar rise as concerns kind of rise, and that risk-off sentiment continues to creep in. And you have to think about it from a global perspective as well. The world is pumped full of dollars. It is the global reserve currency at this time. And if they start to slow or even talk about not paying their debts, it causes less dollars to be printed, right? Or possibly a bit of a push to the upside on the dollar in that regard. So if we see that unfold to the opposite degree, like we start to see the debt situation get talked down, and they come to some sort of compromise, and we proceed as usual, I think it actually causes the dollar to break to the downside. This is actually the case that I'm looking for. So for dollar traders out there, I'm looking for a dollar breakout to the downside. I'm not looking to buy this thing personally. I think that this debt situation will roll over, and when it does, it's going to give way back into our conversation about cooling inflation, which I think has been a downward pressure on the dollar and will persist to be that force again. Hey traders, just to jump into today's video, I want to remind you that we are doing a $500 giveaway this month. We're giving away $500 June 1st, and if you have not already entered that for a chance to win, we're giving $500 in Bitcoin specifically away. If you guys would like access to a chance to win, it's free to join. There's no strings attached. Just drop your email in this link. At the top of the description, you'll see a talk to link, which will take you to a direct message linking system or software where you can have a conversation with one of our team members. Just let them know you'd like to join the giveaway. Just say, hey, I want to join the Bitcoin giveaway for $500, and we'll enter your name into the raffle for a chance to win. Now back to the video. Now, what am I looking to trade off that? Well, I'm waiting for gold to break out. And I've talked about this. I discussed this on today's live stream where we talked a little bit about gold. We talked about Ivan discussed the divergence in the euro, which we'll talk about that in a second. Looking for this to unfold, the dollar to weaken, and to cause some breakouts. In terms of price action, I'm looking for some of these key levels of resistance to break bullish before I'm looking to get long on gold. Now, I will say I have a swing trade open on silver. So I have a position on the long side on silver. I'll show you guys what that looks like here. So this is, let's go SLV, which is the silver ETF that I purchased. It's a really small trade and I just picked it up recently, but I am paying attention to silver. I think that this has potential moves to the upside. So if the debt ceiling stuff, if it gets lifted and we yet again go into concern, what I think that the precious metals market could benefit from is that question of, they're just going to keep printing dollars. How much more are they going to keep just raising the debt ceiling every single time? And yeah, so for me, I think that metals have upside from a fundamental perspective. This is more of a position trade, meaning I'm willing to add to this trade, potentially dollar cost average on silver if need be. I've also got a similar trade on the oil market, and I am trading XLE, which is an energy ETF off of that. So here's US oil, right? So I'm sorry, let's just look at oil, right? Oil trading up slightly here this morning, and if I take a look at the futures US oil, you can see my idea here. I went long, shared this inside of our Discord channel, and these are my current my longer term swing positions. I've got a Bitcoin trade on, I've got a silver long, Euro Swiss long, and US oil. So these are a couple position trades, meaning I hold them, potentially dollar cost average on them. It's more of a fundamental longer term trade, not necessarily a tight momentum trade. In terms of tight momentum trades, I don't actually have anything on, but I am looking at some things. Speaking of that, let's take a look at the watch list here for this week and see what is on here today. So you've got things like the Nikkei up here. You've got oil long. Euro yen is another one that's kind of interesting to me. So here's a look at Euro yen, and you could see this chart looks really strong to the upside. We've been breaking and holding support very, very well. If we do get another retest of this level, I'm actually interested in potentially buying Euro yen. And I want to show you a key divergence that Frank actually pointed out on today's live stream about the COT data. Check it out.
In the meantime, I'm looking at yen pairs because I'm very short biased yen. So I've been in this one for a little bit, Euro yen, and honestly, it's looking pretty good so far. So if it were to pull back at any point, like back towards the lows of where it bounced several times, and maybe even scale in further. But yeah, basically short yen. Euro's now the strongest pair on Smart Money Tracker, so I like this the most.
The Japanese yen, here's your update. We do this almost every Monday. We just take a look at the COT reports together. And for those of you guys, like we said earlier, this tracks the commitment of traders, large speculators, what they are doing in the markets. And the most recent reporting shows that the Japanese yen continues to be very, very much the short favorite. Now they did decrease their short positions. They also decreased their long positions. But I think at the end of the day, where the dust settles is they're still very much 78%. I'm looking at euro. The euro, they changed their short ratio and they actually changed their long ratio. So that's actually pretty bullish euro. On the yen side, though, they increased their short ratio by 11,000 additional contracts. So they increased shorts. They also increased longs at a slightly less amount, still putting us at 76% short ratio there for the Japanese yen. And to your point about the euro yen specifically, you're taking the strongest buy by institutional traders and you're crossing it against the strongest sell currently by institutional traders, which is that yen. So very interesting to just see where that positioning goes week to week. We try and keep an eye on that as that euro yen just looks increasingly divergent here. Institutional traders betting heavily on the euro and very light long position, even heavy short positions on the Japanese yen. Ivan, I know you were talking a little bit about yen pairs last week. What are you looking at? Are you still looking at euro yen, pound yen at all?
I wish I did. Well, I'm getting more focused on dollar pairs now, but it's hit my radar. I don't know. Maybe I should go back to sleep and come back tomorrow and wake up when the market is low around. I can buy it back up again. But in my world, it didn't come back down to a significant support that I wanted to use, like 148.50. So I was left. The trade left me.
Fair enough. Yeah, I didn't capture any of these yen moves either. Feeling a little left out on that. Another thing I want to talk about is the euro against the US dollar. Now, I don't have a strong preference on this one, but from a technical perspective, this chart does look pretty weak. If it does come up into the 61.8%, I think there's a good solid chance from a technical perspective we see sellers take control of this market. But there's an interesting dynamic that Ivan pointed out for a possible breakout at this level if we do see dollar weakness surface. Check out Ivan's take on euro dollar breakouts to the upside going forward.
Surprisingly, I am looking for reversal on euro dollar. Yes, it is currently bearish, as you mentioned earlier, but I just need a pop above 108, 40, 60, like anything that can cross that high. And so that's kind of in preparation for the end of the debt ceiling negotiation. And if this continues lower, fine. But this week's right now looks like a very great small reversal on the 1 hour. So I'm almost ready to pop if euro pops.
I like that because with the, I pulled up my chart earlier with the euro and I've got it pulled up again now. And our charts look very, very similar. We've got that same level marked. And yeah, I mean, I would agree, right? The price action here is pretty bearish overall. However, to your point, if we get, it's fair to, a lot of people love to pay attention to stop losses, right? Where the retail trader stop loss perhaps could be. That's a big focus for a lot of people. Well, to your point there, around that 1.0860, if this level triggers, if it breaks that structure and this downtrend kind of comes to an abrupt end, I would agree. You have a sort of a zone to zone concept here of breaking out at this 1.085 level. If it could get above there, start hitting some stop losses and I guess beating up on the shorts a little bit, could take a run back up to that 1.089. And again, rinse and repeat. Can we break from there? Ivan, tell us a little bit about fundamentally what would give us this scenario? What would we need to see this week? We've got, of course, on Wednesday, we've got the Fed. Friday, we've got core PCE numbers. What would have to happen to paint this picture for us?
One would, of course, be core PCE coming in lower than expected. There can also be some more bearish comments from the Fed. There can also be the debt ceiling. I think there can also be I wasn't not necessarily fundamentally, but a more sentiment change on the dollar, though we have generally been bearish and we continue to be bearish overall, because we are generally peaking interest rates either soon or later. So that's just undercurrent. I would argue. So what do I need to see? I just need technicals at this point, because there is a good enough deviation between the euro and the dollar in terms of monetary policy. They're going two different directions at this point, or future. That buy is the one that I can only do.
Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.